everyone, welcome to Inconvenient Truths. I'm your host, Jennifer Zeng. Recently, the news of the world's largest asset manager BlackRock launching mutual funds in China and billionaire investor George Soros' sharp criticism of BlackRock has drawn a lot of attention. Today, I'd like to talk about this issue and how we should look at the relationship between Wall Street and the CCP. I will also give a brief update of the situation with China's largest real estate developer Evergrande's defaulting problem, so make sure you stick around till the end. Before we move on, please subscribe to and share my channel if you haven't. Please also check if you are still subscribed, as sometimes people get unsubscribed without their knowledge. Also, I have some exciting news to announce. You remember I talked about Chinese scholar and writer Gupi Dong when I talk about the story of the CCP banned and limited English study in China. I said that because he doesn't speak good English, he was deceived by two Chinese-speaking lawyers in the US and Canada when he escaped from China to try to seek political asylum, but was deceived by two Chinese-speaking lawyers into believing that he couldn't seek political asylum and had to return to China back in 2016. I also shared his story when I talked about how the CCP virus statue in California got burned down in July. Actually, Mr. Dong was on night watch together with the sculptor Mr. Chen Weimin and the statue some 20 days before the statue was burned, as they heard that the CCP would do something to the statue. Well, I'm glad to announce here that Mr. Dong has decided to become a columnist for my website and write Chinese articles for me. He will also help me to do some research and write scripts for me in Chinese so that I can use these materials in my program. Before Mr. Dong escaped from China, he had been the chief editor of two Chinese magazines. He has very deep knowledge of Chinese affairs and quick and sharp insights of many world issues too. So with his help, I hope I can do more and do better in the future. I'm very grateful that Mr. Dong is willing to help me as a volunteer because he believes in what I'm doing. But I do hope that I can pay him in the future when I can afford it. So again, any kind of support and help from you guys is very much appreciated. Now, let's move to our topics today. First of all, I'd like to give you a quick update on China's biggest real estate developer Evergrande's current situation. Let's watch a short video first. You will see a lot of Evergrande's employees protesting inside an office building of Evergrande as the company defaulted on its investment management product. Obviously, its capital chain was broken. Let me bring up this video.
大家都在维权了，这么多人都在维权，好多，这个只是凤毛麟角的，就是只是其中很小的一部分的人都在这维权。这是我很大的51楼的办公室，前面是很大的集团。残忍了，都在这个地方。你们在
投了钱都已经挤兑出来了，他能给我们解决问题吗？你说什么？
So this video was taken on September 10th, 2 days after Evergrande defaulted on its investment management product. It is said that 99% of Evergrande employees have been forced to buy this investment managed product called Evergrande Wealth, and Evergrande has about 200,000 employees nationwide. Let me show you a picture. It is also reported that Evergrande has defaulted on its business notes that it issued to other companies when it borrowed money from them. This report also says that victims of Evergrande Wealth from many cities are currently protesting outside the Evergrande office buildings in their cities. Let's watch another short video.
我现在分钱没得了，刚刚那个是没得笑很大的，你的意识形态何在？共产主义何在？遇到那种事情，我不管是哪个国家的，我都会关心，我都会动钱，那才是真正的共产主义。我去警察局，我去爬去政府，为啥子你们要烧脚讥笑我们？我们没有笑我们，我不是没有用心的人，我要拿回我的本钱，难道是诈骗？为了想利息吗？我是耶稣，我不是外头把你宣传来看看，我是耶稣，是给耶稣的福利，是诈骗，是诈
Sorry. Well, obviously, the woman who was shouting with a loudspeaker is a victim from her accident. I guess this is in Sichuan province, which is my hometown. You could see also that some victims were holding a sign in their hands. Ironically, this sign said, "Return my hard-earned money, no delay. We trust the government, we trust the party." They still say they trust the government and the CCP. Actually, I don't think they really trust the government or the CCP anymore, but they have to see this to protect themselves. Let's watch another short video. So these are some victims of Evergrande marching on the street. They were shouting, "Evergrande, return my money." The latest development is Evergrande issued a payment proposal today, offering 3 different solutions for the investors to choose. Let's see this. So option 1 was to pay by cash, but only pay 10% of the investment amount on the last working day of the month when the investment product expires. After that, you can cash out 10% every 3 months until all is paid. So altogether, it will take 28 months to get all your money back. Who knows what will happen in 28 months? So option 2 is to pay by physical assets such as apartments, office buildings, storage, and parking spaces that Evergrande owns. The problem is, if Evergrande has problems selling these properties, what can you do with them? So the option 3 is that you can offset the remaining money you owe Evergrande when you bought real estate from it. And the problem of this option is, if you don't own money, this option has no use to you. So if you were an investor, which option would you choose? Well, it seems the investors were not consulted about the 3 options. They have to choose one of them. So obviously, Evergrande is collapsing. Will the entire real estate market in China collapse together with it? We'll have to wait and see. Now let's go to another topic. We all know that, let me show this picture. BlackRock got allowed to launch China Fund Company in June this year and became the first foreign money manager to be granted a license to run a 100% owned fund management company in China. Then on August 30th, it launched a set of mutual funds and other investment products for Chinese consumers. About 1 week later, it announced that it had raised about $1 billion for its China-based mutual fund. And then on September 6, George Soros published an opinion article titled BlackRock's China Blunder and said that pouring billions of dollars into China now is a tragic mistake. It is likely to lose money for BlackRock's clients and, more importantly, will damage the national security interests of the US and other democracies. And then BlackRock responded by saying that China is taking measures to address its growing retirement crisis. BlackRock thinks it can help China address that challenge by providing retirement system expertise, products, and services. So, how should we look at all these dramas? Here is what I think. So first of all, we need to check a little bit of the history between Wall Street and the CCP. At the beginning of 1988, in the cold of early spring, Beijing, which had been engaged in economic reform and opening up for 9 years, welcomed a 40-member Wall Street delegation led by the chairman of the New York Stock Exchange. The delegation was hosted by the People's Bank of China, later reorganized as the Central Bank of China. At that time, the People's Bank of China couldn't even afford to hire professional translators for the delegation. So students from the graduate department of the People's Bank became free human resources. The Wall Street bigwigs came into contact with this group of finance graduate students who had not yet seen the world but had already learned about stocks. So the Wall Street guys were happily surprised as they realized that in this still materially deprived, closed, and backward country, there could exist opportunities that they could make big money later. In the following year, in 1989, after the Tiananmen massacre, a lot of Western countries imposed sanctions against the CCP. But this hardly delayed Wall Street's effort to enter China. As early as 1992, American International Assurance Company was announced to open a branch in Shanghai, becoming the first Wall Street financial institution to enter the Chinese market. And then, in the same year, Shenyang Jinbei Automotive Company formed Brennan's Automotive to go public in the US, starting the process of Chinese companies going public in the US. Up to May this year, there have been 248 Chinese companies listed in the US with a market capitalization of about 2.1 trillion US dollars. According to some Chinese employees who worked at Morgan Stanley in the early days, Wall Street was intensely interested in China because only this emerging market had a large enough number of volume of companies and assets to satisfy Wall Street's appetite. In the meantime, the CCP, out of its need for regime legitimacy and the need for its leaders to satisfy their selfish desires, also desperately needed to link up with high-end international circles, especially after the international sanctions imposed on the CCP in 1989 for its suppression of the student movement. That was why Wall Street and the CCP fell in love with each other. Wall Street was profit-oriented and didn't care much about social justice. The next question is the CCP still a good partner for Wall Street after it turned to the left? In the past 3 decades or so, Wall Street and the CCP have been getting along with each other quite well. The CCP has grown to become the second largest super economy in the world, while Wall Street has gained huge profits and market expansion benefits. However, what accompanied this were the rapid decline of manufacturing in the US and the ongoing human rights disasters, the dramatic increase in the gap between rich and poor, and the substantial degeneration of social morals in China. Only these extremely bad things have not stopped Wall Street from dancing with the wolves. It wasn't until President Trump entered the White House and began to address the issue of the CCP taking unfair advantage of America that things started to change. Wall Street wasn't able to stop Trump's trade war against the CCP, and the first phase of the trade agreement the CCP signed with Trump secured future financial openness, and 3 years down the road, the CCP did open the door to Wall Street. Wall Street companies could finally set up their own 100 owned security and assets management firms in China. In the meantime, the CCP is rapidly shifting to the left because of internal power struggles and the choices made by the highest authorities. It not only cracked down on big Chinese companies and industries, but also launched media and public opinion wars to attack international capital. And in particular, a series of CCP's drunken boxing actions starting in July led to a huge drop in the market value of US-listed Chinese stocks, with hundreds of billions of market value wiped out. Not only did these listed companies suffer huge losses, but so did Wall Street and US investors. The problem is nobody really knows why these things happened. Nobody knows what the CCP will do next. In such a situation, Wall Street started selling off their Chinese stocks, causing further plunges. In the meantime, it seems that some companies did gain some benefits. For example, Goldman Sachs was allowed to wholly own its subsidiary in China late last year. JP Morgan Chase gained the same permit in August this year, and BlackRock has begun operating in China like we just talked about. In mid-August, BlackRock even advised its clients to increase their positions in Chinese assets by 2 to 3 times. So it seems that these companies believe that they can handle the CCP, and even if there is political turmoil within the CCP, they can still collude with the CCP to protect themselves. Can Wall Street really protect itself? It is difficult for outsiders to know the details of Wall Street collusion with the CCP. However, it was revealed in 2013 that it was a common industry practice for Wall Street investment firms to hire the children of top CCP officials to secure important business. But these practices are likely to be investigated by the US government and confirmed as violations of the Foreign Corrupt Practice Act. So Wall Street is somehow restrained. However, Wall Street may have something that is extremely valuable to the CCP. It can help the CCP to internationalize the RMB. For the CCP to break away from its dependence on the US and the US dollar system and to truly become a world hegemony, it must internationalize the RMB. At the same time, the huge profits earned by Wall Street in China are difficult to exchange into dollars and transfer out of China if renminbi is not internationalized. So Wall Street does have motive to help the CCP in this regard. In fact, Wall Street is already doing this for the CCP. Some international financial institutions are significantly increasing their holdings of RMB assets. Boosting the internationalization of the RMB will inevitably weaken the status of the US dollars and harm US interest. And the question is, will Wall Street and the CCP prosper together forever? I'm afraid not. Recently, we discussed quite a lot about the various problems the CCP is encountering. Xi Jinping is still turning to the far left in order to secure his own power. It seems he will continue to do so until he meets a dead end. When the CCP runs out of its financial resources, it will be Wall Street's turn to sacrifice itself for the relationship and make the CCP live on. So Wall Street's good fortune in the communist China will not last. Although it is possible that BlackRock can still profit in China, this kind of profit is dangerous, as its mission is only to trap more capital in. History often repeats itself. The CCP confiscated all private and foreign assets in 1949 and refused to pay all historic foreign debts. Why are we so confident that it won't do the same again? I think what has been happening recently in China is more than enough to serve as a wake-up call for Wall Street. Well, it seems we are running out of time today. Maybe we can discuss more about the complex relationship between George Soros, BlackRock, and the CCP, as well as why BlackRock's claim about helping China fix its retirement crisis is a sheer lie next time. Thank you very much for watching. Again, please make sure you subscribe to it and share my channel, like my videos, and leave us some comment. Thank you. See you next time.